Now this is the 5th video in the series I've released on YouTube, and watch the other ones to understand what it's all about, but basically we're talking about 50%, and in the first video I said that it doesn't always work at 50%, so I'm going to show you a trade that I actually physically did, and I've just managed to get in the all-time high on this daily chart of the Dow Jones. That there is the all-time high, and so as the market starts to fall, I would take away 50%. I wouldn't know it was the all-time high at the time, but if it was to fall 50% from that high, then obviously it must have been a very important high, and in fact that's what it did, and it got there at the end of February, and in fact you can see the 50% level from that high, and I actually bought it exactly there with a stop loss just below the low, so that if I was wrong, it was probably about there. I can't remember the exact level, but it was probably somewhere like that. So if I was wrong, I would take a very, very small loss, which is of course the secret to making money. Now in this particular case, I was in it for about 3 or 4 days and doing quite well at one stage, but I ended up breaking even. So what I'm going to do now is bring it forward. Now on the day that I bought it, it went up a lot. I can't remember exactly, but it was like maybe 200 or 300 points, and I moved my stop loss to my break-even point, which was round about, again wrong rule, arrow, which was round about there. So I moved my stop loss to my break-even point, so the worst thing that can happen is a break-even, and in fact that's actually what I did. I was in it for 4 days, and on the 5th day I got stop lossed out on that day there, and it went through 50%. So it worked at 50%, but it didn't work long enough to make any money, and the market comes down, and I basically gave a buying opportunity at this stage here, saying that's where I thought the market was going to turn. Again, I'd have to show you the mathematics, but there was 2 reasons why I bought it there. One was because the Dow had given another reason for buying there, but I'd also looked at the Financial Times, the FTSE 100 index, FTSE All Share Index. Now, on the first video of the 4 that I put on on YouTube, I use this as an example to show you 50%. Now I'm just going to change it to a weekly chart, and just go backwards a little bit. Now you can see that the all-time high, which was what the previous video was, I did this video in 2003. I showed you that the major high that we made here was made at 50% from a previous low. Again, go and watch the video, don't particularly want to do it again. However, that high should have a mathematical relationship to its future low. So I'm going to go to the high, and I would take away from that high 50%, and that would be where I'd be looking for some kind of reaction on the market, and you can see that it fell 50%. However, I didn't buy there because when it actually did physically get there, it went a little bit too far through, and I decided not to do it. So in this particular case it didn't work exactly, and therefore I ended up not doing it. And if you look at a daily chart at the time, you'll see it just went straight through and then went straight back up again. So it works at 50, in other words, it wouldn't be a place where you'd be short in the market because you'd be expecting it to turn, but in effect it did work at 50. Now what happened on the All Share Index is, from that low, I'll just cut the line, from that low the market went considerably higher than the all-time high that it made here. In fact, the all-time high was actually made at this point here, and it was actually in July of 2007. We managed people's pension funds, that we put all our clients' pensions into cash. So we're 100% in cash at this stage, before the big fall in the market. Now, as the market starts to come down, what would I take away from that high? Well, among other numbers, the one and what the video is about is I would take away 50%. Now, because the all-time high is higher in this case, 50% is a bit higher than the 50% from the all-time high that was in 2000. So that is a point in the future where if it was to get there, it would be a point where we'd be looking for a changing trend. Now remember that I did a video in 2003, but I've been talking about this as a rule since the early 1980s. And the market comes down, goes up, comes down, goes up, collapses, goes down, goes up, and it actually got to 50% there. And you can see, in fact we'll do it on a daily chart, but you can see that when it was here, it had reached 50% down from its all-time high, making it a point to look for a major change in trend. And that's when I also saw something on the Dow, which I mentioned previously, that looked quite interesting. Now, if we go to the daily chart, you can see that basically it was 50% down from the all-time high, and that's the reason why the market's having its big rally at the moment. It's mathematical. The markets work mathematically. It always has worked mathematically. It always will work mathematically, because these rules were written down by Gann back in the early 1900s, and you can see they're still working even today. Now the FTSE 100 index was a little bit more difficult. Now the reason it was a little bit more difficult is because if you look at a weekly chart, the all-time high on the FTSE 100 wasn't made in 2007. The all-time high was actually made in 2000. So the all-time high was made here, and in 2007 the market didn't go higher than that high. So we wouldn't use a 2007 high, we'd be using this high here, and from that high you would take away 50%. And again, just like the all share, it went quite a bit through 50%. However, if we go into the future, you can see when the all share index had fallen 50% from its all-time high, so had the FTSE 100 index. And in fact, the rally we're having at the moment is because the market fell 50% down from its all-time high. And so you had the FTSE all share, which obviously has got a lot more shares than the FTSE 100, both saying the same thing at the same time. We'll just finish it off with one that I did the last video on YouTube, which was about lead and nickel. And if we put nickel up, and we put up a daily chart of nickel, that will zoom in a bit closer. Now, this is the major low on nickel that was made in October, and these are daily prices. And it has, we've gone right down to 9,000 from a massive high, and you can see that the market has a spectacular rise in a very short period of time. In fact, it's 1, 2, 3. In 3 or 4 days, how far did nickel actually rise? And if we add 50% to that low, you can see that it rose 50% from its low in October. It then went back up to the same level again in January. So you can see that I did that nickel video, I don't know, back in 2000, probably early 2008 I would think, and you can see that a chart that I did then is still working into the future on 50%. So just a quick update. I hope you enjoyed it.